All right, looks like we are ready to go. Hi, my name is Jim Birkhead. I am the Director of Transportation Risk at True Transport Insure, which is an NSM insurance group company. Couple housekeeping notes as we get into this. It's going to be about 30 to 35 minutes. I know, again, like I said earlier, I know everyone's time is valuable, and we want to get in, get the information out, and get out of here. This is going to be recorded, and the slides are going to be distributed to everyone along with the recording afterwards. So, we'll get that information out to you. And if you have any questions, please send them in to the chat box throughout the presentation or at the end, and then we'll try to knock those out in the question and answer. And then, our contact information obviously is in the presentation as well. So, always reach out at any time, whatever we can do to help you, help the trucking community, have everyone do their best and follow some best practices. That's really what we're here to do today. So, getting into the agenda of what we're going to talk about, little introduction of True Transport Insure, who we are, what we do, how we do it. Anytime I'm in a presentation, always like to have an idea, like who are the people talking to me? What is their background? Why are they talking to me? So just a little bit more about us and how we came to be in front of you today. And then really drilling down into the owner-operator model. And what we mean by that is these independent contractor, owner-operator drivers who are, roughly 10 to 15% of the truck driver community, who they are, what this community is, what this model is, and a lot of these terms that we hear thrown about, really drilling down into what they mean and parsing out, some more on the model itself, because I think the better educated on it the better we are able to serve the insurers that we're working with. And then we're going to get into some coverages and underwriting considerations. So, if some of this stuff is newer to you, if you're not as familiar with trucking, what we are looking for, what the underwriters are looking for, how to gauge a risk. And then, wrapping that back up with some of what we are doing day in, day out with this type of business. So, get on to the next slide here, and just to kind of take a step back. One hand, just looking at the attendee list here, I know we have people who are pretty deep in the trucking insurance world. I know we have a lot of people who are newcomers, and so what we're going to try to do here is split the difference. We can't hit everything. Some of the more beginner things as well as some of the more nuanced items here. So I'm going to try to do my best to get to it all. And then a couple other items, again, just to kind of level set is, I can't tell you how many times a day that our team hears, what primary auto liability markets you guys have and what are your rates and that's just a lot of the conversation and a lot of the driving force in, the trucking insurance community is, that primary auto liability nuclear verdict conversation, which obviously is extremely important, and that drives where a lot of this coverage is going. But there's some other aspects to trucking insurance that we don't hear talked about a lot that can still drive an E&O claim, right? That can still that can still be problemsome if it's not properly structured. And so what we're trying to look at here is for these owner operators having that suite of coverages, having that primary auto, having that cargo, physical damage, occupational accident, non-trucking liability, workers' comp, having that fused and integrated, seamless, so the drivers and the motor carriers are protected, and we're doing the job we need to do for them. So that's one thing. And the other thing on that too, again, a lot of the conversation we hear is different than the topics we're going to talk about today. And the other reason for that, aside from potentially being from creating problems for you and your insured, is that I think differentiation is good, right? So if you're a professional who's working in a class of business, the more well-versed, the more better able you are to provide value to the people you're working with, helps them and helps you. And so, maybe it might be a good tack to take to have a slightly different conversation, to be able to walk them through some items that your insureds are not used to being able to be walked through, instead of just having a conversation on primary auto liability rate. Again, I know that's going to drive a lot of conversations in this business. That market is very tough right now, but we really want to get down into the nitty-gritty of the owner-operator world, the coverages that apply to them, and how we can best serve them. So again, who we are at True Transport Insure, we especially transportation. That's our deal. We don't try to be all things to all people. We are not going to reinvent ourselves every day. We have been writing OCAC, NTL, non-trucking liability, occupational accident, physical damage for over 20 years. We're doing the same thing all day, every day. And we have the majority of the good markets in that space. We have a proprietary system that allows us to administer owner-operator programs in these lines of coverage, and that's something that we're going to stay true to for the time being, because it is a niche that we do believe is underserved. So again, especially transportation, we're not trying to be all things to all people. We write those 3 owner-operated lines of coverage that you see in the red and blue, and then we also write cargo physical damage for what we refer to as company-owned fleets or fleets with authority. We write contingent auto, contingent cargo for freight brokers, and we have a moving and storage package that we do. So a little bit about us. Moving on. NSM Insurance Group, we're part of NSM Insurance Group, one of the largest MGAs in the world, especially insurance. Like I mentioned with True Transport, the way we specialize within our areas of transportation, NSM has 30 plus programs where NSM dives down deep, mile deep, inch wide, really tries to master what we do and to be able to provide comprehensive solutions to our agent and our insured partners. So NSM doing about 1.8 billion in premium with 1,000 plus employees in the US, UK, and now additional locations worldwide. So moving on to the next slide. Here's a sampling of NSM's programs. Said NSM has about 30 different programs across a variety of spaces. A couple I'll point out just because they apply to the transportation insurance world that we're talking about today. KBK, one of the best providers of insurance for tow operations, garages in the country. KBK headquartered down in New Orleans, great partner if you guys are looking to get into that business. And then All Comp is an NSM program that is able to write workers' comp for additional transportation verticals. So move on to the next slide. So understanding your own operator model. Here's where we are just going to really drill down into some of the definitions of the model and what some of these terms mean, and really some of the regulatory underpinnings of this niche. So moving on to the next slide. Quick poll, how many owner-operator drivers do we believe there are in the US today? So if you fill that out, take about 5 seconds. I just want to get a snapshot of when we use this term owner-operator driver, how big do we think the market is, and how many of them do we think there are in the US? Okay. All right, so that makes sense. Right now, today, there's about 400,000, give or take. You see different numbers in different areas. There's right about 400,000 owner-operator drivers in the US. Like I said, it's about 10–15% of the overall market. And it's kind of taking a step back with a macro view of what this segment is. It is an independent contractor driver who owns their unit. So it is different than a trucking company that owns its equipment and has employee drivers who they can tell where to go and what to do driving the equipment. So the independent contractor is more of a freelancer, this owner-operator, and it provides flexibility into the trucking segment. So, it's something where when the economy changes on a dime, stops on a dime, and goods that were in demand yesterday are not in demand today, but goods that weren't in demand yesterday are now in demand, such as, COVID. When COVID hit, it has that built-in flexibility industry where the supply can meet the demand in the transportation space. It also enables a segment of drivers to be able to participate in the trucking community that otherwise might not. They might be a seasonality thing. They might be farmers that, part of the year they are working their agriculture. Other part of the year, might be they might have other jobs, or they might just be partly retired and they want to drive a couple times a week. But being an independent contractor, an owner-operator, allows them to pick and choose when they're going to carry loads and allows them to participate in the trucking community. So it's something that, when we see the spot rates go up, so those kind of day-to-day, week-to-week rates for freight go up, we see a lot of drivers split off from the larger trucking companies, and they are more likely to go out on their own, become an owner-operator, and lease back onto the larger trucking companies, because the larger trucking companies have a more annual and or set rates with larger entities. So this is something where we see an ebb and a flow. Right now, we're talking about 400,000 drivers. So, I'd say $1.5 billion or so in premium of the lines of coverage that we are talking about. And what we see is because a lot of conversation goes to the auto liability, it goes to this nuclear verdict conversation. A lot of the programs that we see come our way for these smaller fleet owner-operator drivers are not structured properly. And there's issues waiting to happen. And so that's why, again, we wanted to dive into this presentation today and really get, deeper and wider into it. Next slide. So asset-based versus non-asset-based. Again, we're going to get drilled down on the specific drivers in a second. But when you look at trucking companies and motor carriers in the US, they have a basic decision they can make. Do they want to own equipment and do they want to employ drivers to drive the equipment they own? Obviously, there you're looking at much higher fixed costs. You're looking at, a much more deliberate, controlled way of operating, or do they want to go to the non-asset based way of operating, which is where you contract with these owner operators who own their own equipment, own their own truck, and allow them to haul under your federal authority, right? So the motor carrier has to get federal authority to haul interstate. They have that choice to make. Do they want to buy the equipment and have W-2 employee drivers, or do they want to have 1099 drivers who are independent contractors who are technically business owners hauling for them? Obviously, there's a little more flexibility when you can have the drivers, when you're not, putting the money down to buy the equipment, when you're not entering into more cumbersome, employee-employer contracts with the drivers. So that is why that non-asset type of company, it has a lot of attractiveness in the trucking community. And we also see what we call mixed fleets, and that's where they have some asset-based, some non-asset. So they'll use owner-operators, they'll use employee drivers, and that is actually a very good model that we recommend. If there's ever any litigation or issues where a driver says, I was deemed an independent contractor and I wanted to be an employee driver, but didn't have that opportunity, that is an issue we see in this community a lot. We'll get into that later. That problem is solved if you have a mixed fleet. And also, with the ebb and flow of the economy, I think you're pretty well versed, well able to meet, the changing economy if you have your feet kind of in both spaces there. So again, we use the term asset-based, non-asset-based. That's what we're getting at. Non-asset-based company would be one that utilizes the owner-operators. So next slide. So when we use that term owner-operator, what are we talking about? A 1099 driver, as I've said once or twice already, that owns their truck. So I hear this term kind of used colloquially to describe almost any small fleet, though that's owner-operator business. But if we really want to drill down, an owner-operator is someone that has a financial interest in the truck that they are driving. They must own it or have an option to buy. They're going to be responsible for their expenses. They're going to determine what loads they take. They're going to determine what loads they don't want to take. They're not going to wear a uniform. They're not going to have to come in for mandatory training. And these are generally veteran drivers who like to, who this is a choice for them. This is a lifestyle choice, and they're generally very proud of the choice they made to become an owner-operator and the fact that they can operate on their own. Company driver, W-2 driver, they might be told to wear a uniform. They'll be told, you have a load, you're driving this 2020 Freightliner, and you are picking up this load Tuesday at 8 o'clock in Omaha, and you're taking it here, and then your next load is here. So again, a different relationship, obviously some more security with that company driver, that W-2 driver, because they are being told kind of where to go, what to do, but they're not out navigating on their own, so to speak, where the owner-operator, again, is really essentially a business owner. They may be hiring other drivers. They are determining, the financials day in, day out of settlements with their motor carrier, of the revenue coming in, and they're someone who is much more self-sufficient, for lack of a better term. So again, what we see is a lot of company drivers, employee drivers eventually transition over to that owner-operator once they get their feet under them and know what they're doing. Contract driver, generally we're going to look at this lumped in with the owner-operator. Where we see contract driver a lot, it has some elements of the employee driver, some elements of the owner-operator. Another term we hear used kind of, sometimes I think it means different things to different people. Contract driver is going to be paid by 1099. And an example where we see this a lot is you might have an owner-operator who is, and we'll get into this later, but leasing on to a trucking company that has authority, and that contract driver is maybe driving a spare truck they own. So that contract driver is not a pure, true owner-operator because they don't have a financial interest in the vehicle they're driving, but they're not an employee driver who is driving for a motor carrier being told where to go, what to do. So contract driver we will see in with the owner-operator. So go on to the next slide. Lease agreements. Lease agreements really, the fundamental foundation of the owner-operator model. And I've mentioned this once or twice, but the trucking company, the motor carrier, obtains federal authority to drive haul interstate commerce. They then need to file their primary auto cargo insurance with the DOT. So they have that primary auto insurance in place. When you have the owner operator who does not have that primary, does not have that authority, they can, but we don't need to get too technical. They're not driving under their own authority. They don't have their own primary auto liability insurance. They will sign a lease agreement with a motor carrier that does. And that lease agreement enables them to operate under the authority of that motor carrier and have that motor carrier's primary auto liability respond if they have an accident or collision or a claim while they are under dispatch. So, very important that these lease agreements, clearly spell out the nature of this relationship. We always recommend these lease agreements are done by an attorney. They always recommend that these lease agreements are done by an attorney with a specialty in this, that understands the niche, that knows what they're doing, because we see a lot of problems in these relationships being traced back to the lease agreements. So some of the lease agreements we come in are not professionally done. They look like they're done in the back of a napkin. And some, if this ends up, there's an issue in the relationship over some payments or an insurance issue, and that lease agreement is, makes it in the court of law or makes it into arbitration, something to that effect, it is not going to be a good look on the motor carrier if this is the professional document that they're using to spell out the relationship. So again, very important that the roles of the parties are defined, that it's not overly cumbersome on the owner operator, who is technically a business. And another big thing is they need to be uniform across the board. So what we see a lot, I think we see a lot of these, the startup, smaller fleet trucking, really inspiring success stories. And it might be, someone pulling himself up by their bootstraps. They get one truck, they get two trucks. They might have a cousin, a brother, a friend, start driving for them. They find another friend, and everything is very low key. Hey, we're all good here. Driver, the owner operator's out on the road himself as he's building his business. But we really want to dot our I's, cross our T's, and we want to make sure that the agreement that this owner operator has with, his brother is the same as he has with, the friend of a friend that he just bought on. And it isn't just like a handshake with one guy and the other guy's on the back of a napkin, someone else give a professional one, because, again, we can see not a good look. So very important, lease agreements, have them done professionally, have them looked at, and provide feedback from us, other insurance carriers, legal representation, et cetera, on the lease agreements. So moving on to the next slide. Regulatory environment. So this is big because when we say an independent contractor, and that could be in the sharing economy, that could be in the trucking community, that means different things in different places. So an independent contractor in Oklahoma may not be an independent contractor in New York. California, New Jersey, New York, North Carolina, some of these states have a tougher regulatory environment in determining what an independent contractor and subsequently an owner operator is versus other states. And you see that you have state court decisions, you have state legislation, you have federal court decisions, you have federal agencies issuing rules. You have this whole mix of legislation, court decisions, cultural, legal environments that determine if somebody is an owner operator, independent contractor or not. Why should you care about this? Because if you are working with a small fleet, an owner operator fleet in Oklahoma, and they have drivers in Texas, they have drivers in Missouri, they have a driver in California, you want to know what the environments are in those states. It's always important what state that motor carrier is domiciled in, what state maybe the owner operator's LLC is domiciled in, what states their drivers are in, because this is going to walk down that road of, are they a W-2, are they a 1099, do they, how are you running your business, how are your operations look, how does that lease agreement look, and do they need workers' comp, or do they need occupational accident, which we'll get into. So, and then again, I think if people aren't happy or there's issues and you are not working with your insured on their mix of drivers where they are, some problems can bubble up, which we'll get into. So again, the state that these trucking companies are operated or operating in are very important, and you're looking at essentially 50 different regulatory situations in 50 different states, 51 if you can count DC. So moving on to the next slide. And now we're going to just drill down into some of the coverages that we're seeing, particular to owner operators, and just to specify, so that trucking company, that motor carrier that is operating with that authority, they have the primary auto liability. they're going to be purchasing general liability for themselves. They're going to be purchasing cargo insurance for their owner-operators and employee drivers. There's going to be a few coverages that owner-operators are going to be responsible for going out to obtain for themselves. And we see owner-operators go obtain these individually. We always recommend what we call a group or fleet policy, because a lot of times there's going to be a better rate. You might have a better insurance carrier. The owner-operator and or motor carrier is going to be able to make sure that all drivers have coverage, that no one's slipping through the gaps. So we always recommend that if an owner-operator has 10 drivers driving for them, let's get a group policy off the ground, and let's try to get all these drivers enrolled onto it. But what we're going to go through right now is occupational accident, non-trucking liability, physical damage, drill down what they are, how they pertain to the owner-operator, circle back, and then go from there. So next, occupational accident, may or may not have heard of it. So occupational accident is for a 1099 true independent contractor driver. It is a compliance solution that is not the same as workers' comp, but functions very similar to workers' comp and can be obtained in lieu of workers' comp. So what does that mean? It's coverage that has accident medical, basically paying for the medical bills if a driver is injured, has death and disability, death, disability, dismemberment limit, where if a driver loses a limb, if a driver unfortunately dies while they are hauling, while they're under dispatch, that a benefit is paid out to the driver and to the family if they are deceased. There's also a disability payment, right? So if the driver is unable to drive for a week or 3 weeks or a year, there's generally going to be max $500, $600, $700, something to that effect through each week that the driver is able to receive while they're out of commission. So again, it does not have the full scope of benefits of workers' comp, but it is a very good coverage that provides accident medical, disability, and a death and dismemberment payment for drivers. It's going to be billed monthly, so what we're going to look at is about $125 to $180 a month per driver. Rough rule of thumb, obviously, what they're hauling, the state that they're in, loss history, a lot of these things can affect what that rate's going to be, but it's going to be monthly billed. And then there's generally going to be what we call a non-occupational accident limit on here. And so what that is you might have a borderline case, occupational being a critical word for this coverage, and that it is in effect when a driver's under dispatch. But if the they could be working, they could not have been working, we're not sure, but it's $2,500. It's easier and better for everyone if insurance carrier is able to pay that $2,500 rather than litigate and figure out if the accident or the incident happened while the driver was under dispatch and or hauling for the motor carrier. So again, similar to workers' comp, not exactly workers' comp, compliance solution for 1099 drivers. Highly recommend it. We like a lot about this coverage. We rate a lot of it. It is more cost effective, and it's something that is a very good deal for a lot of these drivers. Next slide. Generally looking at about 40% more cost effective in comparison to workers' comp. Another big thing for the motor carrier, if they are footing the bill for occupational accident for 15 drivers, and they move to an OCAC policy, because these drivers are 1099 independent contractors, they will save themselves premium because the drivers pay for OCAC themselves, right? These are technically business owners, and they're paying for their own OCAC coverage versus being employees and having the motor carrier pay for their coverage. Also, too, you'll see a lot of workers' comp policies. They're not. They don't want independent contractors, so they all seem to have different philosophies on that. But some of them, they don't want independent contractors caught up in their comp policy. So again, this is something that we like. We also think if a motor carrier organizes a group policy for their owner operators, we think it reflects a mature company that is looking for benefits, looking to retain drivers, looking to keep drivers healthy on the road and whole. And we think it speaks very well to a motor carrier that is thinking ahead and looking to set up a policy for their drivers, make sure the drivers are taken care of. Next slide. Contingent liability. So contingent liability is frequently matched up with occupational accident. Occupational accident is meant to cover the individual drivers in case they are injured, during the course of their duties. Contingent liability protects the motor carrier, protects the trucking company. And again, it's frequently written by the same insurance carrier and in conjunction with OCAC, with occupational accident. And what this does is protects the motor carrier in case one of these 1099 drivers or someone who's classified as 1099 says, you know what, I'm actually an employee, I'm entitled to workers' comp benefits, give me workers' comp benefits. So contingent liability is going to pay for defense costs, it's going to pay for legal costs for that motor carrier and or pay out those workers' comp benefits if it is deemed that driver is a W-2 employee in reality. So again, this is a level of protection for that company, why we also recommend getting that group OCAC, matching that OCAC up with a contingent, and everyone is taken care of. This is an annual policy, so it's going to be about $2,500 plus or minus annually is mostly what we see. And it is surplus line, so of the coverages I'm going through, it is the only one that is not admitted. And then one other thing to add, this is very much contingent on that lease agreement. So how that lease agreement reads is very important to a motor carrier's eligibility for contingent liability. So a couple more coverages we're going to run through, moving on to non-trucking liability, and then we'll begin to wrap things up. This is very important because we see this coverage a lot. Some of you may be familiar with it, some of you may not. A lot of people refer to this as bobtail. So bobtail is when, and if you're walking through this, you can see, okay, when this owner operator is leased onto a trucking company, they are driving under that trucking company's primary auto liability insurance. Now, what if they're not hauling anything? What if they haven't had a load in a couple of days, and then they don't have a load for a couple of days, and they need to take their truck somewhere to pick something up, dry clean, store, church, anything like that? What happens then if they hit unfortunately they hit somebody, they hit something? That is where this bobtail non-trucking liability aspect comes into play. The market today, primarily, majority of what we see is non-trucking liability. A lot of people still refer to it as bobtail. Bobtail is pretty much any time the tractor does not have a trailer on the back. So that's going to be bobtail. So it's pretty broad coverage. Non-trucking liability is only when this driver is not under dispatch or even driving to pick up a load. So they are truly, they have not worked. They're not driving to work. They take their tractor out to run an errand or do something. Bobtail is a broader coverage. A lot of people send us in submissions and talk to us. They ask for bobtail, they want bobtail. I think they understand, talk to them. I hope they understand that they're getting non-trucking liability, but just want to make that distinction clear. Unladen is another coverage you see here. Not as much anymore. It is out there. And unlading coverage is when the tractor does not have any trailer on the back, and or the tractor has a trailer that does not have a load. So you have NTL, a little bit broader bobtail, a little bit broader unladen. 90+% of the coverage I see out there today is this NTL. So again, that plugs that gap of when that driver is not under dispatch, is not hauling goods, is on their own, and there's an incident. This is also a monthly premium account, so you're going to see reported and billed monthly. It's going to be $30 to $60 per unit per month. So if you might have $35 a month, 10 drivers, they each pay this premium themselves. Do the math. That's going to be the monthly invoice. There are some endorsements on this coverage that broaden it out that can eat into that primary auto liability, but I think that those also are pretty few and far between. Carriers are pretty loath to hand them out as well. $1 million limit, no deductible is kind of the market rate. We see some higher, lower limits, but you're not going to see $1 million. So that is non-trucking liability. Move on to physical damage. I think everyone's probably most familiar with physical damage. Even if you're not necessarily a trucking agent, you probably see this in some of your other accounts that have fleets or even personal auto, comp, collision. The way it works in this world is, you're generally going to see the rate's going to be a percent of the TIV. So 100,000 TIV, or let's just say written at a 5% rate, it's going to be $5,000 for the year, broken down typically into 12 different installments or 12 different reported payments. So again, this is another one that we frequently see in that monthly invoice, monthly billed type coverage. It is the shortest tail of it in that generally, it's pretty cut and dry, not a lot of complexity. Occupational accident, non-trucking liability. There's a little more nuance to those coverages. Physical damage, the owner operator owns the truck, they hit something. the truck is damaged and or a tree falls in the truck is damaged, they take it in to get fixed, physical damage pays for it. Like I said, pretty cut and dry. There are some endorsements that we see added to this. You have a few of them listed there, so that's something to have that conversation if you're placing this. Something that we've seen higher values over the last couple of years, which has been interesting to see the markets respond to that. There's the units being built today are much different than units being built 5 to 10 years ago, and that's something that I think that we are still seeing play out. But again, physical damage is that last coverage we see swept up into this OCAC, contingent liability, non-trucking liability, physical damage. So now I'll start to wrap up. Understanding underwriting account. So if you're talking to owner operators, walking them through, getting a submission together, what are the kind of the key things to understand in regards to their exposure and what the insurance carriers are going to ask for? What do they haul? Do they have policies in place, fleet policies in place? What do those losses look like? What status are they in? Are they intermodal? Are they're refrigerated? Are they a flatbed? Who owns the units? Going back to that occupational accident in particular, does each driver own their unit? You might have one owner operator who owns 8 units and he has contract drivers or other owner operators onto him. And one thing that we always recommend is just really kind of nailing down, because we see a lot of very complex relationships in this world with the trucking companies, with the owner operators. Okay, so whose authority are they running under? Who is leased onto who? Who is driving for who? Who owns what unit? And then are there contractual relationships in place to tie this all together? So like I said, sometimes you really have to sit down and map it out to make sure you understand the flow. But that everything from a physical damage payout, to an who owns the unit, where does that money go? Is it a lease to purchase? So is the owner operator leasing that truck from a third party or from the trucking company? If that unit's damaged, where does that payment go? To that occupational accident and workers' comp situation, to the primary auto liability, non-trucking liability. Very important to map out the specific relationships and how everything fits together when you're working with an account. Next slide. What do we look for submissions in this world? Applications. So there's some supplementary applications out there. We don't see a lot of accords anymore. I don't like accords. They drive me nuts. I'm sure they drive a lot of you nuts too. So supplemental applications, a sample lease agreement, example of a lease agreement, loss runs. If there's not a group loss runs, if one of these fleets has never had occupational accident before, non-trucking liability before, MVRs will at least show some type of driver record, and then a schedule of the drivers and the equipment. And on that, we're going to want to see dates of birth, addresses, values for the units, license numbers, a lot of that. So those are the main items. Again, we're going to send this information out, but that's a lot of what we generally see when we're underwriting this. That will give you an idea of the exposure. And then if there's any narrative, like I said before, how everything fits together, or they're growing, they're transitioning, a couple of the claims, this is what happened. They were actually, somebody hit them on those 3 big physical damage claims. If there's anything like that to add, obviously that always helps with a submission. So next slide. So yeah, so again, that's the long and short of some of the terminology, some of the owner operator model, and some of the coverages that we see. We're doing this in all 50 states. We are writing these coverages day in, day out, fleet size from 1 up to several thousand. So like I said, have a lot of the markets that are really specialized and write this, and we're always looking to develop new market relationships as well and stay on the cutting edge of that. So that's who we are. We're always here to be a resource, so not necessarily to write an account. Or if we can help anyone out there, if we can help an owner operator, insured, or a motor carrier, like, always help, because we just want people doing things the right way, want people protected, want people safe, happy, healthy, and successful. So yeah, that's TTI. I think we have one more slide here on our True Advantage system. So if you guys have larger fleets, we have a system where we take on I mentioned several of these coverages are monthly reported. We can do that for you, where we step in and do the adds and deletes every month, and we do the invoicing and certificates of insurance issuance. So this is a value add, because these can be somewhat labor intensive when you get into the larger fleets. So if you guys have questions, we're going to look to wrap up pretty soon. Just please send them over. and I'll start getting to these questions as we wrap things up. And then I think our contact information is the last slide of this. So I'm going to start going through some questions now. Yes, we will share the slides with attendees. Yes, someone asked, is occupational accident for owner-operators, whereas workers' comp for W employees? Yes, and my apologies if that was not clear, 100%. And again, that can vary by state, but occupational accident is a coverage that is compliant for 1099 independent contractor owner-operators. Workers' comp is for W-2 employees. That is for trucking. We also see that in the sharing economy. We also see that in, healthcare, staffing, some other areas of the economy, but 100% comp is for W-2 employees. No, if does state still require workers' comp if a driver has occupational accident insurance? They do not. Again, that's where I think we have to do our homework and make sure that, what are the regulatory environment in that state? How is that, the lease agreement structured? How are their operations? But if that is a, if it's a true 1099 independent contractor in the state of, Kansas, and they have occupational accident, they do not need to carry workers' comp. Just make sure that sometimes you see the comp carriers not quite understand that, and they might try to pick up that driver at audit on the workers' comp. So maybe it makes sense to have a conversation, or better yet, write it all together, the OCAC, the contingent, the comp, if you can, with the carrier, so it's seamless. But at a minimum, have that conversation with the comp carrier, make sure they're aware that these drivers do have occupational accident, do not pick them up at audit. If a father and two sons are the owners of 3 trucks, it can fall into owner-operator. Potentially, like I said, if they own the units and they are not driving under their own authority and they're not carrying their own primary liability insurance and they're leasing on to a motor carrier, then yes, if they meet all those requirements like anyone else, they can be father, 2 sons who own 3 trucks can be owner-operators. If there's required for these lines of coverage, don't ask for IFTAs, not a requirement. Are all filings provided? There are not filings for these coverages. Those filings are for DOT. Those filings are for the government, for trucking companies that have their own authority. These owner-operators generally do not have their own authority, so that there are no filings that they need to do. Our policies direct bill. We do have the ability to direct bill some, not all, depending on the fleet size. If it's less than 10, a lot of these policies we can direct bill, but I don't want to promise, yes, we can direct bill all of them. So any endorsements for mechanical issues? Some of the physical damage policies, they may have an endorsement for mechanical breakdown. I think most carriers we write with NRC these days are not offering that. There are a couple that do, or if you specifically ask for it, they may provide that. But yes, there are some carriers out there that are able to do an endorsement for mechanical breakdown on a physical damage policy. Yes, physical damage can be a standalone policy. Yes, we write a fair amount of that, and so does the market. We see a lot of monoline physical damage. No, do you need primary carrier primary auto liability insurance carrier information on the quote for NCLPD? We do not. We know that they are if they are driving under someone's DOT, then by definition they're not going to need primary auto. We're not going to need to know, because we can look up that DOT, and on the websites, you can see that they have primary auto liability. So as long as an owner operator is leased onto someone that has that authority and that coverage, we don't need to see any evidence of that coverage when we're writing it. That's why we'll generally ask for the DOT number they're leased onto, though. Can we write coverage for livestock haulers? Yes, we can. Obviously, a little more difficult for several lines of coverage, but it's something. Hey, generally we can always find someone that we can work with to get that done. 3-year loss, or 3-year of loss minimum. A 3-year minimum loss runs required. Generally, no, because a lot of the coverage that we see is new, so that it might be the first time that owner operator, or that small fleet is obtaining coverage. So we generally do not need 3 years of loss information. But if they have had policies in force, yes, we need as many years of policies in these lines of coverage as they have had. Hope that makes sense. So I think we are running out of time. I might do one or two more and then we'll wrap up. Yes, did you state NTL is not the same as bobtail deadheading when the truck is not running on authority? Yes, that is correct. So by definition, non-trucking liability is not the same coverage as bobtail. And deadheading, have not seen that as a coverage, but I know the term deadheading in insurance, in the trucking industry, and NTL is not the same as bobtail and deadheading. Different coverage, different concept. So, okay, yeah, that's about it. So that's about it for the questions. Thank you for your time. If you have any additional questions, please reach out anytime. We'll try to get back to you as quickly as we can, generally within a couple hours, if not same day. But thank you for your time, reach out, and best of luck with everything, and have a great day.